Barks Alpha here, reporting for Newshound by the Deep Blue Sea with your 24-hour crypto news roundup. On today's bulletin, Strategy's $1.25 billion New Year Bitcoin buy. Ethereum OG nets $274 million, profit after decade-long hold. Tether freezes $182 million in 24-hour compliance blitz. 11 million crypto projects wiped out in 2025. And crypto YouTube views crashed to 5-year low. Let's dig! Kicking off 2026 with a massive statement, the Saylor-led strategy, formerly MicroStrategy, has executed its largest Bitcoin acquisition since last summer, snapping up 13,627 BTC for approximately $1.25 billion. Funded through the aggressive sale of common stock and perpetual preferred equity, this latest orange blitz brings the firm's total holdings to a staggering 684,410 BTC, now representing over 3.2% of the entire fixed supply. Despite recent price volatility, the move reinforces the company's position as the undisputed king of corporate Bitcoin treasuries and comes just as MSCI confirmed it will continue to include digital asset treasury firms in its global indexes, removing a major overhang of institutional uncertainty. And it's in one hand and out of the other in a massive event for the Ethereum network, as one of its original whales has finally emptied their bags, realizing a profit of approximately $274 million. The legendary holder, who amassed over 154,000 ETH with an average entry price of just $517, moved their final 26,000 ETH to Bitstamp today to complete a total liquidation. While the sale created an immediate $81 million wave of sell-side pressure, analysts note that the supply is being rapidly absorbed by institutional stakers like Bitmine Immersion, which now controls over 3.4% of all ETH. This tectonic shift from individual buyers to corporate balance sheets coincides with Vitalik Buterin's latest push for a sovereign web, urging the community to move past simple transaction speeds and focus on building a data-rich infrastructure. Compliance news today was captured by Tether in one of the largest single-day enforcement actions on the Tron network, as the project froze over $182 million in USDT across 5 high-value wallets. Working in close coordination with the DOJ and FBI, the stablecoin giant utilized its administrative kill switch to lock the funds at the contract level, effectively neutralizing the assets without moving them. This move underscores the total centralized control inherent in fiat-backed stablecoins, which now account for an estimated 84% of all illicit crypto activity. Since 2023, Tether has frozen more than $3 billion across 7,000 addresses, signaling that as digital dollars become the primary medium for global sanctions evasion and fraud, the issuer is increasingly acting as a direct extension of government oversight. And as we wave goodbye to the yesterday's market we love to hate, a sobering new report from CoinGecko reveals that over 53% of all cryptocurrencies ever listed on Gecko Terminal have officially died, with the vast majority of these failures occurring during a brutal 2025. The data shows a staggering 11.6 million tokens collapsed last year, accounting for over 86% of all crypto failures since 2021, as the market became hopelessly saturated with low-effort meme coins and experimental projects. The explosion of launchpads like Solana's Pump.fun drastically lowered the barrier to entry, leading to nearly 20 million total project launches, most of which proved to be short-lived digital dust. This survivability crisis peaked in Q4 2025, where over 7 million tokens vanished in just 3 months, serving as a stark reminder that in the era of instant token creation, a trip to the graveyard is more frequent than the moon. A sign of the times, perhaps, as retail engagement in crypto has effectively evaporated, with YouTube viewership for digital asset content hitting its lowest level since 2021. While Bitcoin remains at historically high levels, aggregated new views across major crypto channels have compressed into a low, flat band, a far cry from the multicolored engagement spikes seen in previous cycles. The data suggests that casual Main Street participants have largely checked out, exhausted by volatility, or distracted by other sectors, leaving the recent market moves to be driven almost entirely by institutional players and corporate treasuries. For content creators and retail-facing platforms, this prolonged attention bear market indicates a fundamental shift in how the public interacts with crypto, signaling that the era of explosive, hyped cycles may be giving way to an institutional reality. That's it for today, dogs. Remember to share with the pack, keep your noses to the ground, and your ears pricked so you never miss a beat. Reporting for Newshound. This is Barks Alpha. Yes, I do. Barks Alpha.